And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the SARA Rail Conference 2025. Powering progress, connecting economies. Good evening, 8 minutes after 6. I'm Stephen Grootes. Welcome to The Money Show tonight. Just listening to the lead story in the EWN bulletin there around Thabo Bester, saying that this documentary, loved the title by the way, actually would defame his character. I have to say, but you're a convicted murderer and rapist. What character do you have left to defame? Always find it fascinating. So often you'll hear someone who will say, all I am or all I have is my name. And I've often thought that's so true. But if you're Thabo Bester, and we all know, and we've seen you actually being convicted of rape and of murder, well, I think we know your name. So I don't know. Try and put a monetary price on it. I mean, what would you say is the value of Thabo Bester's name? And I don't mean to sell documentaries. I mean in terms of character and repute. I find it just astonishing. Lots going on today. Lots going on in the States, of course. The US President Donald Trump saying he has already fired, I don't think that's correct legally, but this is what he says, Lisa Cook. She is a governor on the US Federal Reserve. Her term only expires in 2038. As I understand the claim against her, it comes from someone who's actually been appointed by Trump. So, I mean, there's a lot going on here. There'll be a long court case. I'm sure it'll go all the way to the Supreme Court. Push the dollar down, push gold up. Thank you, Donald Trump. Do appreciate it. But still, a very strange story and will lead to all sorts of conversations around central bank independence. We'll speak to Sikonathi Mantshantsha in just a moment. He's been writing some really important stories about the Government Pensions Administration Agency and some of the very strange dealings. I mean, the one that just made my eyes pop was when they rented a building for 10 years from a company that didn't own the building and attacked the property company did own the building. And they say, no, we haven't sold it. It's ours. There can be no way that this happened. I mean, it's a very extraordinary story. Now the National Treasury basically taking over the agency. You've heard so many stories over the last few years about how we're changing the way we generate electricity. It does seem that one of the big problems is the grid, and we'll talk about that to Dani Mola in a couple of moments as well tonight. Don't forget, this situation around cryptocurrencies. We got a little bit stuck with our conversation around airports yesterday, so we'll catch up with that. Does look now like SARS is going to come for your crypto income, which I suppose it has kind of every right to do. The problem, I suppose, will be tracking it. Karel Diaga from Sixpence will explain that. And then also tourism and wine. So not whining about tourism for a change, but just are we making as much money as we actually can out of sort of wine tourism at the moment? I noticed today, and I was really surprised by the story, that Cape Gate and Score, they're both in the steel business. They're accusing ArcelorMittal of undercutting them. Okay, these things happen. But they say they're using the government bailout to do it. So their suggestion is that ArcelorMittal has got this government bailout. We're all aware of that. And it's the result of the bailout, say Cape Gate and Score, that this has allowed ArcelorMittal to undercut them, and off they go to the competition tribunal. It's an astonishing story, a major claim to make, but also is just a reminder of some of the intricacies of this business and how much is at stake. You might well be involved in that. Be very interesting to hear from you on that this evening. Your thoughts on that, on Thabo Bester, on other issues tonight. 011 883 0702, 021 446 0567, and of course voice notes on 072 702 1702. I don't know if you ever paid much attention to how the building you're working in is actually powered. There's some big changes on the way for that. You might well have a view on that as well tonight. Good evening, 12 minutes after 6.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM, streaming on the Prime Media Plus app
and DSTV channel 856.
Well, confirmation today, the Finance Minister Enoch Godongwana now effectively taking over the running of the Government Pensions Administration Agency. He seconded a Deputy Director General to go and run it. That's after several reports by News24's Sikonathi Mantshantsha that showed the agency had done some very questionable procurements, including signing a contract to rent a building for 10 years when the owners of the building said they knew absolutely nothing about it. Money did actually change hands. Well, Sikonathi Mantshantsha, journalist at News24 Investigations, joins us now. Sikonathi, good evening and thanks for your time. As I understand it, Stadi Mngomezulu is now running the agency. He's actually a DDG in the National Treasury. It would seem then the Treasury now has pretty much direct control of this agency for a while.
Stephen, it absolutely does. Look, it always did through the finance minister. But now that he has seconded one of the deputy director generals to the government pensions administration agency, then that it does effectively mean he has taken over the running of the agency. There is no board there. Remember, there always was never a board there, but the chief executive reporting directly to the finance minister.
So the CEO, Kedibone Madiehe, what are they accused of doing? What have your investigations shown up?
Even over the past 3 weeks, News24 has been publishing stories about contracts that appear at the Government Pensions Administration Agency to be riddled with irregularities that really do border on fraud and corruption and other nasty affairs. This has cost, or rather at risk, is more than 1.3 billion rands of the agency's money, which really is money belonging to the pension, to the civil servants, the pension assets of civil servants, which are invested through the Government Employees Pension Fund and the Public Investment Corporation. There has been the biggest of those is a lease for a building, as you did say in your introduction. The owner of that building, which is Attack Limited, the company listed on the JSE, says it knows absolutely nothing about an alleged sale of the building to a company called Shula Developers, which could not produce any argument as far as we are concerned to say it has bought the building. The Government Pensions Administration Agency is leasing that building for a period of 9 years and 11 months from Shula Developers. But Shula does not own the building, and the owners of the building know absolutely nothing about that. But that's not the end of the matter. It's only just the start. The Government Pension Administration Agency has already paid 60 million rands for renovations and partitions inside the building, except there will be no partitioning happening there because the company that has been paid, the two companies that have been paid for that, have absolutely no access to the building and have absolutely nothing to do with that building.
The pensions agency, if I recall, actually, or the Government Pensions Administration Agency, did sort of defend this. They said they'd been shown around the building. They said that they'd been given documents. Was that all made up?
Stephen, in our we when we started writing this story, we gave the pensions agency about a week to answer questions, and they only came back saying they cannot answer these questions because there are internal processes and auditing going on, which prevents them from talking to us. As you will remember, when we went to when we published the story, then they came out and defended the story in other platforms, except not to News24 at all. They did not entertain our questions. They did not even try to answer our questions. But to people that have absolutely nothing to do with the story, they have come out and said, we actually have seen the building. We have been to the building. They cannot give a date for that.
Presumably, there'll now be an investigation into what happened, I would like to think. Presumably the CEO, Kedibone Madiehe, is sort of on formal suspension, and there'll be a process that comes after this.
Stephen, the finance minister, who is the direct authority, the executive authority at the Government Pensions Administration Agency, Mr. Godongwane, was notified about this formally as a start in June, in the first week of June, by the audit committee of the GPAA, and he did absolutely nothing. The Government Employees Pension Agency, the Government Employees Pension Fund also did request the minister's intervention on July 9, and the minister did absolutely nothing about it. only when News24 started publishing these stories and asking the minister what on earth did he do about these reports, did finally we see the action where, for the first time, as you say now, the chief executive has been suspended, and the minister has formally announced an investigation, the forensic investigation that was requested in June. He only announced that on Friday last week. And yes, there is now some movement towards investigating all of these contracts, and many that we have not yet written about. We have asked them questions about these, but News24 has not yet published the stories. You will have seen the statement coming from National Treasury yesterday, listing all sorts of contracts that will be investigated. These are the questions that we asked them and alerted them to these contracts. And now the minister is really doing things to appear as if he has really taken interest in the matter.
Sure. I mean, it would seem, on the face of it, from what you say, I mean, criminal charges could flow from all of this. I mean, maybe should flow from all of this.
Definitely criminal charges should flow not only against the chief executive of the Government Pensions Administration Agency, but also against many of her colleagues in the executive of that agency. Many of these companies that have already been paid cash to do work on a building that they cannot access. There is a lot of misrepresentation and a fraud that must have happened here for these things to all happen. And someone needs to lay charges, and really the buck does stop with the finance minister. There should be, the evidence is quite solid, and we understand that people are scrambling right now to either pay back the money or even to hide some of the evidence for things that we already have spoken to them about.
Sure. Sikonathi Mantshantsha, thanks so much. Journalist at News24 Investigations.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, I'm sure you're aware of the many different changes and transitions underway in our electricity system. Some of this is leading to disputes. Look at Eskom. They're fighting NERSA over electricity trading. New companies want to buy and sell electricity. Within this is supposed to be a massive change in how electricity is being generated. But there are also huge problems with our grid. So there's more and more solar capacity being built. Getting that power to you, getting it to industry which needs it, is actually quite difficult. Donnie Mola is the IPP Molilo's Chief Engineering, Procurement and Construction Officer. Donnie, good evening. I get our grid was designed for a coal era. What does it need? How much of it needs to change for our new greener era? I worry if the whole thing needs to change.
Hi, Stephen. It's actually Jan Fourie speaking, the Chief Executive Officer, but I'm a recovering engineer, so I'll try to cover some of those as well. So the system doesn't need to be redesigned altogether, but it is very necessary that some additional substations and transmission lines are built, because currently it's effectively like the water pipes being full and fully utilized. And to put more energy and electricity into the grid, we need to increase the size of those pipes to take this additional capacity. And I think the main concern here is not that South Africa can build it, but the lead time associated with creating this infrastructure, and then also to what extent will it be done by the NTCSA, and to what extent will private sector be able to contribute to the build-out to ensure it happens at a pace that can sustain the renewable energy generation facilities that needs to be built.
I mean, there are all sorts of things. It sounds relatively easy. Build solar plants, connect them up, and off you go. But, I mean, as soon as you mention the word servitudes, in other words, you need to build these cables over private property, well, that's when it starts. That's when the complications and the fights just really start to begin. I mean, would it be easier in some ways to start with just a whole lot of new grid? Our power stations were built in coal deposits. Our grid was built around them. Now we need something really very different for this new era.
Yeah, so, I mean, building linear infrastructure like power lines or pipelines or the like takes a lot of time to develop, as you say, because you need to traverse hundreds, if not thousands, of properties to get from point A to point B, and each of those is an individual negotiation with landowners. that needs to happen, and then there's all the permitting to follow suit. And I mean, I think what is quite heartening is the ITP program that was launched by the IPP office and supported by Treasury to get the private sector involved in some of these corridors, and hopefully from that we can kind of now get the rollout of the approximately 14,000 kilometers of transmission line that needs to be built according to the transmission development plan that was put out by Eskom to enable a larger renewable energy rollout.
The big thing is money. I mean, time is one problem, money is another, and even the private sector will need a lot of capacity to do this. And the more quickly you want to do it, the more expensive it'll be.
Yeah, so the capital is definitely available from the private sector, and as you would have seen from the renewable energy build-out, on the one side you need equity from investors like ourselves, and then the South African bank and institutional investors also play a very important role in terms of funding these projects, because there's a large amount of proportion of debt that goes into funding the projects, because these projects, they need to stand on their own legs. They're funded on a project finance basis. So the capital is available. I think it's really the policy and the regulatory framework around the transmission lines, and making sure that it's enabling framework. And that's why we're closely watching this ITP that'll really determine the scale and the pace of the rollout as required to sustain the kind of the build out of more renewable energy generation.
I mean, what's also happening is that the private sector is developing microgrids. So richer people in richer communities or companies with a lot of capital are kind of able to go it alone. Now, that's fine, but this country's not really going to work long term if we're all on different grids, because you can't then ask the rich or force the rich to subsidize the poor. So you need to have something that works for everyone in the end.
No, I fully agree with that. I think grid defection is not the answer, in my view, because to get the most out of your investment, you need to be connected to the grid if you're on the generation side. I think when it comes to flexibility, I mean, the role of batteries is just going to play an increasing role in making sure that we can harvest excess renewable energy and make it more flexible. I think one of the issues that we're sitting with in this country is the inflexibility of our power stations. The old coal-fired power stations, I mean, you don't really want to fiddle with them. If they're running, keep them running. And renewables generate when the sun is shining and the wind is blowing. So the addition of flexible generation, in addition to kind of more power lines, is what the country needs to keep the lights on.
Jan Fourie, thanks very much indeed. CEO of Mulilo, 25 minutes now, after 6.
The Money Show.
The Markets.
Anthony Modasani, Senior Equity Sales Trader at Absa CIB. Anthony, good evening. Thanks so much for coming in. There was a rebalancing of a global index, the MECI index. What is the rebalancing and why does it matter?
Yeah, Stephen, always good to be here. So, yeah, it's a rebalance that takes place sort of quarterly. It is one of the global indices, the Morgan Stanley Composite Index. It's a major event. It happens for all major markets, so not an SA-specific event. So, a committee will get together. They will look at all the various indexes that they monitor and all the constituents, and they'll rebalance that. So it means that some constituents within that index will fall out and some will come in. What happened today is that we had Sibanye come into the MSCI South Africa Index, and we had the likes of Aspen, Woolworths, and Kumba Iron Ore all fall out of that.
Okay, and that happens because you need to actually keep tabs on how the value of certain shares is changing. Aspen's had, it's been disastrous over the last few weeks, and therefore it has to come out.
Yeah, that's correct. Aspen hasn't really had the best of times. It's a major liquidity event for our market. We had about 46 odd billion rand go through in the closing auction. To give you an idea, throughout the trading session, only 19 odd billion rand really traded. So, it's a big liquidity event, and you have a lot of money that tracks these indexes at the end of the day.
Yeah, you don't want to fall out of them because then you lose a lot of that money.
That's correct.
Okay, Old Mutual, a strong trading update from them that was reflected in the share price. If the stock markets go up, then insurers like Old Mutual do nicely.
Quite right, and they pointed exactly to that. They said a strong financial performance as well as good support from the insurance space in general. So there were a couple of one-offs in that number, but it seems like the market's still quite comfortable, especially in terms of what they're guiding from an earnings perspective. It was a solid performance for the stock. It held up really well. It was up as much as 6% at one point during the trading session, while the peers were sort of all softer. So yeah, good performance from Old Mutual.
And then Motors, again, I mean, the automotive sector going through so many different transitions at the moment, lots of concern about it, but we're talking really about domestic demand. Their share price was up, even though their earnings were not a big increase, but I think that's maybe a comment on the environment.
Yeah, I was also quite surprised. They spoke to like they've seen an increase in demand coming through, and I think I've spoken through time about the consumer like really battling. And I think what's quite interesting is going to be Tata coming to the market.
Yeah.
Right? I remember you discussed that. I think it was last week or something. So more competition, but I think I was also surprised. I didn't think that you'd see the reaction you did. I mean, 2%, that's pretty solid for the stock on a day like today when sort of global sentiment was soured. But yeah, seems to be doing enough at this point in time.
The US, and we need to talk about, again, the US President Donald Trump. Lisa Cook's a governor on the US Federal Reserve, so the equivalent of someone on our monetary policy committee. He says he's fired her. I think it was an hour and a half ago now. Her lawyers filed suit and said no chance, but how's this going to play out? I think it's going to get pretty ugly.
Yeah, it is. I mean, he's clearly trying to consolidate power within the Fed, right? And now it's a test of their independence at the end of the day, So I think, like you said, it's probably going to go to the highest court in the US, and they're going to battle that out over there. But, Trump can be pretty adamant in that sense that he thinks he's right and he's got enough evidence. Encouraging that she's come back and pushed back, and, she's seeking to, go sue and pursue this, not rather sort of step back and, if the president doesn't want me, then I'm out. Quite surprised by the equity market reaction. So we did see it sort of sell off into the close yesterday. It's up again 20 odd basis points. Just, keeps grinding high and high. The dollar was weak, and the gold always tells you the story, right? Gold knee-jerked high, and it's held just below $3,400 an ounce. So there is that a bit of concern around it in the market, but maybe the idea is these things take a while to play out, and it's going to be the noise quietens down, and then we'll see what happens down the line.
But this won't be the last governor Trump goes for.
No,
I mean, he'll look for anything, and that pushes the dollar weaker over time, I would think.
Yes, I do think so. I think, near term, you are going to see investors a bit wary, especially also in the US Treasury space, right? The Treasuries are what sold off, and that told a bit of the story of that. Listen, this is quite serious. So yeah, I do think that it puts a bit of a sort of a ceiling and a negative sentiment around the dollar near term.
Anthony Modasani, thanks so much. Senior equity sales trader for ABSA CIB, bringing the time on the Money Show to 6:30.
WhatsApp Stephen
On 072
702
1702.
A couple of WhatsApp voice notes coming through this evening. Bonnie saying, this issue about, Anonymous actually, I think, saying, what is this issue with index balancing? What justifies it? I thought that free markets readjust themselves in the medium to long term. So look, Anonymous, as I understand it, what happens is that you've got shares that go up and down in value. Because they go up and down in value, you want your index to be a measure of certain shares. And over time, a bit, I suppose, like the inflation basket for Stats SA, certain shares just no longer really reflect what's happening. It'll be about value. It'll be about various things. And you can't just keep the same shares forever. Otherwise, 100 years down the line, you've still got Anglo-American or something. And yet things change. So basically, they have a quarter rebalancing. They sort of assess how things have changed. That's how I understand it. Tundanani in Boksburg tonight saying, Stephen, this interdict by Thabo Bester against the release of the Netflix show about himself reminds me of the interdict against Sony Pictures by North Korea. They wanted the movie The Interview, which was about Kim Jong-un. They wanted it stopped because apparently they wanted to protect the integrity of their supreme leader's name. They say a good name is worth more than gold. Therefore, I guess even after a good name has been erased, the lingering gold dust residue still holds value. I suppose, Tandanani, but I mean, in the mind of who? So in North Korea, I don't think many people in North Korea were ever going to see a movie made by an American studio. In terms of Thabo Bester, I mean, is there anything that anyone can tell me about Thabo Bester that could change my mind about him? I really can't see it. I just don't see that. 011 883 0702 021 446 0567.
702 with Stephen Grootes.
Email him on stephen@702.co.za.
Well, a report in Business Live this week, SARS is now actively trying to get more revenue, more tax that is due to it, from people who are investing in cryptocurrencies and sending the money overseas. Now, in fact, SARS confirming that there are nearly 6 million people in South Africa who hold cryptocurrencies of one form or another. 17,000 people have disclosed to SARS that they do this. I mean, the gap is rather large. Karel Diache is the CEO of Sixpence, a blockchain software company. Karel, good evening. To have 6 million people holding cryptocurrencies, only 17,000 declaring them, obviously some work for SARS to do here, and some of it, I imagine, quite complex.
Yeah, and this technology is moving incredibly fast, and complex it indeed is. And it took SARS a few years to actually start zooming into this asset class. Of course, we know crypto has been around since 2008. And it's become really popular in the last half a decade or so. So I think this tax gap, it might have been very small in the beginning, but it's definitely growing very fast. And now SARS has their eye on it. The fact that only 17,000 people disclosed might speak a little bit about the nature of a crypto investor. I think a lot of them try to invest in crypto with the idea of being a little bit below government surveillance and trying to get away with big gains maybe, and trying to stay under the radar. But that is unfortunately a big misconception. SARS definitely has their eye on it, and I think that there's a lot of people that might receive letters very soon.
How does SARS monitor it? I mean, it's crypto. The whole point is it's supposed to be not quite anti-government, or maybe, but sort of free of government interference. So then, how do you monitor things with crypto? Obviously, you need to get to the exchanges.
Exactly. So, I mean, the vast majority of people investing in crypto do it through the exchanges. It's very difficult to actually get exposure to crypto, the asset class, without going through exchanges. It's possible, but it's much more difficult. So, vast majority of people do it through the exchanges. And when you, of course, sign up on an exchange, you have to provide your ID documents and your KYC documents, and you are now legitimately treated as any other investment class, because the FSCA have declared it as a monetary instrument. All of these exchanges have to register under the FIC Act, which means that they are now financial institutions and treated as such, and they have to do these reportings either to the regulator or at least have to comply when the regulator issues them with these Section 46s or similar type of demands to make that information available.
So these people who have been investing in it, getting an income from it, and not really declaring it, I mean, must have known that eventually this would catch up with them.
Yeah, I think that, if you think logically about it, yes, definitely. Although there was a very long time in which these exchanges were not treated as financial service providers. So, and I have to also say that the regulations, especially from SARS, has been extremely vague, at least the guidance thereof. So for a very long time, I mean, myself, I've been dealing with crypto since about 2016, and I remember those days, like, you didn't really know what to do. So the onus was very, very much on the taxpayer during those early days as well. So how do you treat it? Is this a commodity? Is it security? When is capital gains? When is it income? And how do you treat the offshore activity? And it can be quite technically complex as well to reconcile all of those transactions that you've made on these platforms and then turn it into real financial reports that you can submit as part of your returns. So I have to say the clarity that we've received from SARS have only been lately, like maybe in the last 2 or 3 years. They've given us a lot of clarity. Before that, it was really anyone's guess as to how you should actually treat this.
I would imagine that, yes, there might be a large number of people, 6 million we're told, who have sort of cryptocurrency accounts. That doesn't mean that they actually all have a lot of income that is taxable. Some people might just have opened one and kind of moved away from it, or maybe didn't trade very well, or just lost interest. I mean, there'll obviously be a substantial number who have done very well and have got significant income from crypto.
Yes, exactly, and it's not only that. Well, you're right. So as many people who've actually made big gains, I think there's probably the same amount or even more that have made big losses, because we of course know that crypto can be very volatile. If you don't know what you're doing, it's very, very easy to burn your fingers. But I think you also have to appreciate the complexity of dealing with multiple platforms. So, for instance, if you do a bunch of trades on the JSE through a broker, let's say you use one of the platforms in South Africa which you can buy and sell shares, it's usually just on the one platform. You're not going to take a Sashel share, buy it on the JSE, and then sell it on the NASDAQ. That's not really possible. But with crypto, you can do that. It's universally, so you can go and buy it on one exchange across, in some foreign country, and you can bring it into South Africa and exchange it here or dispose of the asset again on this side. That type of universal ability of dealing with crypto makes it incredibly complex, because now you have to take into account many different platforms, some of which SARS do not have intel on, and you have to reconcile that in a way that no one really knows how to do that. So I think that really brings in an additional layer of complexity to this asset class, which investors are not really used to.
Do you have a sense, Karel, of how all of this is going to end? I mean, we get a sense that governments are getting more and more involved. I mean, I would imagine on the law, if you get an income from something, it must be taxed. Doesn't matter what it is. And someone might well bring a court case for some reason. But on the law, as it stands, SARS will be right to do what it's doing. And that is probably how it's going to end, because despite the fact it's cryptocurrencies, they still have the power of the state behind them.
Exactly, and I think the regulator might have initially dismissed the asset class, maybe think it's a fad, this one it will come and go, and then later it realized that this is not the case. Crypto is here to stay, so it needs to provide policy and guidance on how to treat this asset class. And once they really started thinking about it and started unwrapping this asset class, they realized that it's actually very much the same as any other asset class. Some crypto tokens behave as commodities, some may as securities, and other as currency. It's basically those three categories that you can place any crypto token into those, and then you can apply rules that have existed for centuries on how to treat them. Not only SARS, I'm talking all of the regulators can actually do that. And I think finally now, after many years, we're seeing that. Where this is going to end, I think that's exactly it. It's going to end in the same place as any other legitimate asset class, whether that's shares, stocks, securities or commodities, or forex or currencies. It's going to end at exactly the same place and be taxed in the same way.
Karel Diaga, thanks so much. CEO of Sixpence, a blockchain software company.
The Money Show, Stephen Grootes, is brought to you by ABSA CIB, proud sponsor of the SARA Rail Conference 2025, powering progress, connecting economies.
Well, the last few days have seen quite a lot of screaming and shouting about tourism after that decision by the Tourism Minister, Patricia de Lille, to fire the board of SA Tourism. But I do worry that some good ideas, some good work in this space is sort of being ignored. And a suggestion this week that, in fact, we could probably make a lot more money for Mzansi than we currently do from wine tourism. Daniel Rousseau is the head of sales for agriculture at Nedbank Commercial Banking. Daniel, good evening. We all know how well our wine sector has done. It goes back a long way. And if you forget for a second, the wine sector will remind you. How much more money do you believe we could make from sort of wine tourism in South Africa right now?
Thanks, Stephen, and good evening to you and the listeners as well. Yes, the wine industry being with us since 1659, making the first wines, and it's an industry that has consolidated over the last number of years. So obviously margins being impacted quite a bit. But I think if you look at the potential for the wine industry, especially in terms of wine tourism or agri-tourism, I think it's immense. Now, unfortunately, the data that we have is around about 3 years old now. But I must say that the numbers are quite staggering. If you just look at the total income derived from wine tourism in 2022 already, it was sitting at close to 9.3 billion South African rand. And that's about 17% of total winery turnover. And we've seen the increase, quite an incremental increase since 2019, 2020, up to 2022. And we know it's an industry and a value add to the industry that's still growing, especially in the smaller type of wine sellers and businesses, where you see a lot more potential than for wine tourism, compared to perhaps income from your core business. So it is quite immense, and it's definitely with 522 wine sellers across 23 different regions, quite diverse as well. Just think about the potential that can still be generated.
Sure.
On the exports, I'm calling on the export side, but let's call it the overseas tourists that visit South Africa, but then also local tourism that we see increasing, especially in the wine industry.
We would obviously have to make some investments. Where would we make that investment? Is it in the product? Is it in the marketing of the product? Is it actually getting people here from overseas?
Yeah, it is quite interesting that, getting market share in this space is all about experience. The experience that a buyer or a consumer gets from a specific wine estate. And I think, for me, I think that is perhaps the most important. Yes, you do need to do capital expenditure in terms of restaurants if you feel that you need to go that route. But it's not necessarily just that, it is knowing your client, knowing the customer, and knowing what his preferences is, and creating that experience. Remember, as I've said, I think the biggest market perhaps is the local market. As the numbers showed, that close to 37% of all visitors is within a radius of 60 to 70 kilometers from, a specific wine estate. So I think, creating that experience and linking that to your brand as well. That's perhaps the first step, in terms of loyalty from a customer side. And you don't need to spend a lot of money on wine tourism. It is just doing the basics right. And you can also combine efforts with wine estates in your specific region, to create that experience. Just thinking now about mountain bike tracks and biking routes that we see in the Stellenbosch-Franschhoek areas, just two examples. That's quite successful. And again, keeping your consumer, your buyer within that specific region. And you want to spend as much time with that potential buyer as possible, and then get return buys or purchases from your consumer or your buyer.
As with so many things, it's all about repeat business. Danielle Rousseau, thanks very much indeed. Head of Sales for Agriculture at Nedbank Commercial Banking. Do appreciate the time. All right, well, I do sometimes think our wine industry is just unstoppable. We'll look at the green economy in a moment. We'll look at electricity and buildings. Don't forget Rotendo and Ndwingwi. He'll be with you to update you on what's happening on our continent in about 20 minutes from now. And Warren Ingram, the right investment for your retirement income. How do you work out that mix? Looking forward to that conversation. Your calls for Warren, your calls for anyone really, on 011-883-0702 and 0214460567. Good evening, you're with The Money Show. It's 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
6 minutes after 7, good evening. You might want to prepare your questions for Warren Ingram from 7:30 on 011-883-0702 and 0214460567. He'll be talking about the right mixture of investments for your show, for your retirement, of course. And a reminder that The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the SARA Rail Conference 2025. Powering progress, connecting economies. Also to come, we'll get an update for you about what's happening in our continent, and in a moment we'll be looking at the issue around how your building gets electricity. That's changing quite dramatically in all sorts of interesting ways at the moment.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
A couple of interesting commercial property transactions making their way onto SENS today. Accelerate is selling the Buzz Shopping Centre and the Waterford Centre. They're both in Fourways, by the way. That might well lead to some sort of changes in Fourways. I saw there's a big property in Parkmore. It's on 4th Avenue in Parkmore. That's being sold as well by a different company. The vacancy rate there is 57%. You're not making any money on a 50% vacancy rate now, are you? I mean, so that clearly needs a change. I'm always interested in what happens with shopping centres. Who owns them? Who buys them? Where do they go? Why? How does the business go? Does it change as a result? What changes are they making? I don't know if you have any comments about the sort of experience you get. Do you know which chains owe the, and can you even tell when you go into one shopping centre and you go into another one, if they're owned by the same person or different people? Sometimes I think you get a sense, but often you don't. And really, the shopping centre is so often about the vibe. You crack that, you make a lot of money for your tenants. But if you don't, you can end up like Fourways Mall, where you just kind of, go there to buy milk and then walk away as quickly as you can. It sometimes feels. 011 883 0702 021 446 0567.
702. Stephen is on The Money Show.
6 to 8 p.m.
The green economy on The Money Show. Well, I don't know how much time you spent wondering how the building you work in gets its power, how much electricity it uses, all sorts of new technologies, all sorts of new designs as well. Growth Point Properties announcing it's launching a renewable energy certificate. Essentially, you'll be able to be 100% sure that your power is environmentally friendly, or that's how I understand it. The head of Growth Point's corporate advisory is Werner van Antwerpen. Werner, good evening. Okay, how does this actually work? What are you doing?
Good evening, Stephen. And I think, the main crux of it is that, there's two main drivers that's driving electricity from different sources. The one is climate change, and also tied to that is sustainability reporting. And then in the context of South Africa, it's the cost of electricity is just escalating every year. So those two drivers actually makes for unique opportunities within the South Africa context. And Growth Point actually looked at the opportunity, and our first initiative in the renewable energy space was rooftop electricity, where we are installing rooftop solar plants on buildings that actually can accommodate those installations, and that is progressing quite well. But rooftop solar can also address just a certain percentage of your consumption, and then tied to that is the sustainability reporting side of things. Is that sustainability reporting is becoming as onerous as financial reporting, especially for listed companies. And how do we as Growth Point assist our tenants to reduce their scope emissions, and that they can disclose to their carbon disclosure programs, and assist them to also drive their corporate goals to a net zero economy? So we're trying to balance those two things in the initiatives that we are looking at.
Okay, so if you get a sort of certificate that your building is running on green power, where is that electricity actually coming from? As I understand, electrons, they kind of don't work like that. Once they're in the system, they're in the system. Are you actually then saying that the power that someone is using was generated in renewably, or are you saying that the power that you're using is matched by power that was generated renewably?
Yeah, exactly. So the concept of renewable energy certificates is actually an international standard. So there's different environmental attributes. There's also carbon credits that's regularly used. Renewable energy certificates is a different standard or different process to reduce emissions. So before I dive into what it means is, there is different scope of emissions. Scope 2 is like when you have a generator at your house and that you actually responsible for that emissions. That's scope 1. And scope 2 is when you buy electricity from Eskom. That electricity that you bought is actually generated by somebody else, but that is predominantly your highest scope of emissions from a tenant perspective. So now the question that Growth wanted to answer was, how do we assist our tenants to reduce their scope 2 emissions? And that is in essence the electricity that they buy from Eskom. So what we have done is we've partnered with a company called Fuel Switch, where we developed a concept where we utilize IoT devices, blockchain technology, and also AI. All three of those different technologies we actually incorporated in this solution. And what it does is actually it incorporates the wheeling concept. So what wheeling is that there's a generator off-site. That generator generates into the national grid of South Africa at a specific meter. And then it's more accounting exercise. So, you generate 100 kilowatt hours at a specific point, and you need to allocate that 100 kilowatt hours at a specific building within Growth Point. But that 100 kilowatt hours need to be certified with certain standards and procedures so that the tenant knows that this electricity comes from a respectable source, and he can actually use that to reduce his carbon emissions in his carbon disclosure program. So what we have done with our initiative is we actually made the whole process audible. It's transparent, it's easy to use, and we previously only big clients with big pockets would be able to utilize this type of technology, and we've managed to reduce the cost significantly for our tenants, almost to negligible amounts.
Well, I was going to ask what impact this has on the price of the electricity that you're actually buying.
So in essence, think about it like this. There's a source that generates electricity, and there's the other source that certifies that you actually generated the electricity. And that electricity is then allocated to a specific tenant. Now, what one tries to do is you try to procure through a power purchase agreement electricity at a lower rate than what Eskom can supply you, and also at a lower escalation. And with our Eco2 initiative, we try to pass through some of those cost benefits, but then we also try to pass through those renewable energy certificates, the certification part of it, to our tenants through a blockchain exchange, where they can then decide either they want to redeem that certifications for their carbon disclosure, or this is actually also a tradable instrument. You can actually sell that certificate for another person to utilize. So all of that technology we have incorporated and made it as simple as possible for our tenants. And it's all a drive to actually not just assist our tenants, but it's a drive to create momentum in the economy that the whole of South Africa and also the property sector can benefit at the end.
Are you expecting a lot of demand for this? I mean, sometimes a new product, you get a few people who are very keen. You have to wait a while for it to build momentum.
No, definitely. And what we expected in this type of product, the type of tenants that will come on board is the blue chip and the financial sector. And that is the case. So the guys that will be interested is the big corporates. And I think, the smaller guys where sustainability reporting is not so front of mind, they might lag, a couple of years where they actually will dive into it. But the nice thing about this is if you're a small tenant, we will be able to allocate these renewable energy certificate tokens to you. And if you don't want to redeem that, you can just push it into the exchange and sell it. And you can utilize that money for something else. So it's a dual purpose. It works for the small tenant as well as the large corporates.
Werner, thanks very much indeed. Werner van Antwerpen is the head of corporate advisory at Growth Point.
The Money Show, Africa Business Focus.
The Africa Business Focus is brought to you by Absa Business Banking. Talk business with the bank that gets it. Absa Business Banking. Dr. Rutendo Ndwingwi is founding director at Tribe Africa Advisory. Rutendo, how's it? Kenya is getting quite a lot of money in financing from Japan Samurai to boost their industries.
Good evening, Stephen, and good evening to your listeners. Indeed, so with Kenya, it's actually the good, the bad, and the ugly, and I'll explain why. The good is obviously they've just gone to the TICAD conference, Stephen. They've got 169 million through Samurai financing, so it sounds like a Tom Cruise movie coming out from an exciting perspective. But the reason for that financing or the investment that Japan is doing in Kenya is primarily for two reasons. One is to support the vehicle assembly plants. Bear in mind that, Stephen, Toyota, Isuzu, Nissan, and Hino, which is a subsidiary of Toyota, is assembling in Kenya. So that's the good side of it, and something that Kenya also needs. The challenging part, which is the bad side, is that at the same time, I think this is the quagmire that President Ruto has is that he owes a lot of money to China. And the reason I'm highlighting this is because it will dovetail into the other story, but he owes about $5 billion in debt, and every year he's servicing about $1 billion in debt to China. And what has happened now is he had to go very close to China and have discussions with it, which has made America very unhappy. And now he's trying to negotiate. So you see where this is all going, Stephen. You're trying to solve one problem on the eastern side of the continent, and on the west side, the Americans are now, he's trying to negotiate a goal, but the Americans are saying you're too close to China. And he's saying, guys, the only reason I'm close to China is I'm trying to sort out debt. And this is besides the politics. So the Japan deal is sort of a breath of fresh air, but he's between a rock and a hard place, Stephen. It's going to be interesting to see how this plays out.
And then the Qatari royal family, they're committing $31 billion to 2 African nations. I mean, that might well come with a few strings. What kind of investments are they making?
So the 2 African countries, it's 31 billion in total. 12 billion is going to Zambia, to Botswana, and 19 billion is going to Zambia, Stephen. So from a Botswana perspective, I mean, we've been very much aware that Botswana has been kind of battling with regards to diversifying its economy. It's found that obviously with the artificial diamonds that are there and the challenge in terms of that whole value chain, they've had to diversify the economy. So through the Qatari family, which is a company owned by the Mansour Holdings, the Sheikh has invested 12 billion in Botswana. The area, Stephen, that he's primarily focused on is around infrastructure, energy, mining, diamond refinement, agri-tourism, and defense. So you can see it's quite broad. So from that perspective, it obviously inject excitement and energy into the investment landscape of Botswana. On Zambia, on the other hand, in Zambia, Stephen, if we recall, I mean, a few weeks ago, we talked about other investments that were happening in Zambia, the deal they did with Angola. There's another big infrastructure project there. So the president of Zambia is obviously doing a lot of right things. But in this case, the specific investment from the Qatari family, it's going to build about 1.5 million dwellings. That's accommodation for people. It's also established a natural investment development bank. So it's very specific areas, a bit of agro-processing and export-oriented value chains. So again, Zambia has attracted a lot of investment. But at the same time, Stephen, if you also recall, they were having big debt problems with China. Even I think there was a big loan that they got from African Bank, if you recall, that was highlighted as at high risk. So, you look at all of these guys, they're definitely understanding they've got problems, but they're talking to people who are willing to help them and invest in them. And I guess ultimately that's a good sign, but hopefully it's sustainable in the long run.
Yeah, I know. Very interesting just to see how it all plays out. In Nigeria, they're looking at bionic arms for amputees. This is quite something.
It is, and it's one of those stories I like, Stephen, not because obviously the amputees, but it's a African problem, be solved by Africans. So the specific name of the bionic arm is called Upu Ubokobong, and it's actually named after the individual's brother. And what had happened was, I think it was one New Year festive period, and he got injured. The younger brother got injured, and that's how the story began. The other brother was an electronic engineer, and he says, how can I help my brother with regards to his injured arm? And that's where the whole idea of creating a bionic prosthetic arm came into place. So the way it works, it's bionic in the sense that it uses electro-technology with regards to communicating waves from the brain to the hand, but it's all been manufactured in Nigeria by Nigerians. And already before they've even produced the final product that's going to market, just from experimentation and the trials that they've done, Stephen, already countries like Australia, Britain, the USA, besides Nigeria and Ghana, are already putting pre-orders. So I think the upside of this is we know that these kind of things are usually expensive and not easy to come by from an African perspective. But to find a country like Nigeria, which is usually focused around other big stories of commodities, oil, etc., Stephen, playing a crucial role in terms of solving a simple but well-needed solution for Africa in this sense is going to go a long way forward. So it's a great story to have in this day and age.
And then in Rwanda, they're turning coffee waste into cooking energy, a sort of organic manure. Wow.
It's organic manure. And another great story. Rwanda is not as big as Kenya and Uganda, Stephen, with regards to creating coffee in terms of from a quantum perspective. But one of the big things about the coffee that they produce, the outer husks, which probably make up or compose about 45% of the actual component of coffee, usually goes to waste. So they've been able to remove those husks during the processing period, and it's quite a nutrient-rich organic manure. That's one source of byproduct that's coming out of it. So it contains nitrogen, phosphorus, and potassium. And then the other side is that they can convert and use those pellets to actually as a source of energy. And that's a big thing because it goes a long way with regards to providing a source of energy that is clean. About 20 smallholder farms that are involved in this circular economy are actually participating in this byproduct and the creation of energy. And because it's related to clean energy and it ticks all the right boxes, it also allows them access not to only local financing, but international financing that is going forward with this. So it's another great story just in terms of an innovative idea coming out of Africa. Rwanda aims to reduce its post-harvest losses through such an initiative by 5%. So it will make significant inroads, but it's a great story again, Stephen, with regards to Africa producing its own solutions to fix current challenges that are there.
Dr. Rutendo Ndwingi, thanks very much indeed. Founding Director at Tribe Africa Advisory, author of the book Rumble in the Jungle Reloaded with the Africa focus. Running a business, Absa Business Banking gets it. The pressure, the pace, the risk, that's all on you. You need more than banking. You need flexible funding, real-world tools, and sector expertise that shows up when it matters. But most of all, you need a banking partner that gets it. So talk business with Absa Business Banking because they get it. Your story matters. Absa is an authorized FSP and registered credit provider. T's and C's apply.
The Money Show.
Personal Finance with Warren Ingram.
Well, of course, time on a Tuesday evening to speak to Warren Ingram about personal finance, and good to hear from you. Your questions for him on 011-883-0702 and 021-446-0567. Your voice note questions as well, if you prefer that, on 072-702-1702. And one of the big issues when you retire is what you do and how you are paid the money from your investments. So if you are living on the funds that you have accumulated, if you're living on the funds you've saved and invested for your retirement, how do you actually get paid out? Warren Ingram, good evening. There are kind of two big categories of this, right? Two sort of big ways, generally speaking, that you can get paid out from these investments.
You're right, Stephen, and it breaks up really around our retirement fund. So when you reach retirement age, in this country, retirement age is 55, but most of us are probably going to keep going flat out until we're 65. And when you get to that age and you officially retire from your RA or your pension fund or your provident fund, you're faced with the choice at that time to either take the money as a monthly pension, and that's kind of something that a lot of our parents or maybe our grandparents would have known about. When you get a guaranteed income and you know exactly what the amount is, and you know you hope it goes up with inflation every year. The alternative is something called a living annuity, and that's, I mean, it's now quite old. It's you know easily 20 years old, but that's not so certain. The outcome that you have there is quite variable. So we're faced with that choice as we hit retirement, and for a lot of people, Stephen, it's probably the biggest decision they make after or financial decision, let's be clear, after they buy a house. So it is a big one, and it's something we need to pay attention to.
Is it something that people are properly prepared for? I mean, yes, we all talk about, you know, how to invest the best way, but it's a big decision to make, and often you'll be making it with someone else. So you really need to think about it very carefully.
You do, and I find that the answer to the question is no. I think a lot of us are not prepared for it. Number one, there's a financial education, financial literacy element to this, because when you work for a salary for your whole life or you run your own business and you kind of go, month to month, you don't really pay attention to investments in the way that you will when you're retired, because that's probably the first time in life you become a professional investor. You actually live off the money that's invested on your behalf. And so these decisions are often, it sounds funny to say, but they're often quite traumatic. People find, huge amounts of stress, and it's an area they don't understand well at all. And then, I guess the downside is that you become prey sometimes to dodgy selling tactics, and other times just the emotion overrides logic and reason. And so, you might be getting great advice, but the emotions, prevent you from hearing what you need to hear, and you make the decision based on emotion. And unfortunately, emotions are very bad ways for us to make sound, sensible decisions around money.
Okay, so let's just sort of start with these two things then. How do you get a guaranteed income from your retirement investments? How do you make that work?
So these are the industry jargon for these. They're typically called life annuities or guaranteed annuity, and they will be the guaranteed pension. So what happens is you retire, and then you essentially take your retirement capital and you do a transaction with an insurance company. And the reason why you're doing an insurance company is because they're contracting with you. They're taking your retirement capital, and in exchange for that capital, they're guaranteeing you an income for the rest of your life. And the way that they'll do that is they'll say, please explain your age, your medical circumstances, and your state of health as you are now. And then how would you like your income to grow? So would you like it to grow by inflation, or would you like it to grow at a fixed percentage? For example, it's quite common where they'll say, you start this year at 50,000 Rand a month, and then next year we'll increase it by 5% as an example. And then the other thing that they'll add to that is if you are married, then your spouse might be entitled to a portion of that. It's usually about 75% of that pension amount if you die. So on the surface, it's quite a nice product, because if you don't understand investments, you don't really want to pay attention to markets and politicians and the like, you might go for this. And a lot of people would be tempted. The thing to understand here is you've paid all that capital to the life assurance company, and on the death of you and your spouse, that's it. There is no money. There's no inheritance for your children. So it's the one very big consideration when you make the call to choose this guaranteed or life annuity.
Okay, so on one extreme, you could live for, 30 or 40 years and still get paid out at the end of it. On the other extreme, you could both pass away tomorrow in a car accident, and basically, I hate to put it like this, the company that you bought it from wins the bet.
Yeah, often they're a little bit kinder to us, Stephen. They might give you kind of a guaranteed time. For example, they might say, well, if you do die in the first 5 years, we'll pay out a portion of the capital to your beneficiaries. But let's say you die in year 6 or year 7, then all of that money goes to the insurance company. And I think the important thing to note here is, if you're making this decision, it's you on your own. On the other side of the equation is a very large company that employs lots of, medical specialists, actuaries, and the like. And so when they give you an indication of how much income they're happy to pay out, they're doing a calculation to say, let's say we expect you to live until age 84. If you die at age 80, then as the insurance company, they win. And if you die at the age of 99, then you win. And well, you don't win because you're dead, but financially you're better off than if you had died on the day that they expected at age 84.
I presume it also means that if something happens and you need a little bit more money now, there's no way that you can get it. If you have a medical emergency or something, you have to make other provision for it because you won't be able to get it.
Exactly right. So your capital is gone. That money is paid. It's basically almost just one very big insurance premium. There is a contract, and what you get paid on a monthly basis is it. There is no negotiation. There's no going back or undoing it or the like. You've done this. Once you start that process, it runs for the rest of your life in the most literal sense.
Okay. And then, we don't know what's going to happen, but what happens if inflation suddenly goes to 20%? I mean, you would have to make sure that's priced in quite carefully.
You're hitting the other very sore point on something like this, because there was a time in South Africa where inflation would go right up to sort of 15%. And if you were, if you'd selected an option where you said, I'm happy to start with a little bit of a higher monthly guaranteed pension and very happy just to take 5% escalation, you would be in real trouble that if inflation runs at a level of 10 or 11 or 15% a year for a period of time, because it's going to erode the buying power of your pension very, very quickly. And again, that's a contract now. There's no redoing it. So, I think that you're hitting the one thing that I would say to people always is, if you're going to choose something like this, and it's not bad all the time. There are circumstances where these are very good for people, but you cannot choose one that just gives you a fixed percentage growth on your income every year. You can't just say, give me 5%. You have to take the one that says, I want that my income linked to inflation. And the reason why you might be tempted to take the fixed escalation at, let's say, 5% a year is that they might say your starting pension, if you want to take an inflation increase, is going to be 50,000 Rand a month. But if you want the fixed escalation of 5% a year, we'll start you out at 55,000 Rand a month. So it's a little bit tempting to take the higher income on day one, because we don't understand buying power and we don't understand the impact of cost of living on our money over a decade or two.
Okay, let's talk now about the other sort of main product, which is a variable income. How does that work?
So these are called living annuities, and they generally, came into existence round about the time that just after unit trusts were developed. And the idea here is that you have your capital, you invest that in a product that will give you an income on a monthly basis, but there is no guarantee here. So you take your money, you invest it in a living annuity. And if you start that, let's say on the 1st of September every year, what will happen is, if you do it in 2025 on the 1st of September, you're going to have the option to elect an income, and it will be at the lowest end. You can say, pay me out 2.5% of the value of my investment on a monthly basis. So you're going to have 2.5% over the whole year, but they divide that by 12. And they give you a monthly income. You can go right up to a level of 17.5% of the value of your investment, and again that will be divided by 12 and paid to you on a monthly basis. The trick here is you can't change that income percentage from month to month. So if you started on the 1st of September, the next time you can change your income will be on the 1st of September in the following year. I think it's obvious, but I just want to make the point. You can't expect that if you start with, let's say, R1 million in your retirement fund, and you're drawing 17.5%, you must know that that's not going to last very long. I think it probably lasts you 5 or 6 years, and you will have eroded all the capital that you've got in that investment. So that's the real trick with something like this, is people are tempted to start very young, let's say they retire at 55 and they start with a very high level of income, not really thinking through that, they're actually doing themselves a huge disservice later in life.
What happens then if you die, and you've still got money left over?
If you've managed your living annuity well, and you have children or other financial beneficiaries, you can nominate them as beneficiaries on this investment, and it's treated as a life assurance product. So from that perspective, you can nominate beneficiaries who immediately will become entitled to the balance of your living annuity. So if you've done well and you get to age 99 and you die at that age, and there's you don't have a spouse and your children are still alive, they become beneficiaries of that money. And why that's attractive is in South Africa, you don't pay estate duty or executors fees on the benefits of a retirement fund when it goes from the owner to the next generation. So it's a very efficient estate planning and kind of tax planning tool if you can manage your expenses well over your lifetime.
We're talking to Warren Ingram, the co-founder of Galileo Capital. Your questions for him as well. He's a certified financial planner about personal finance. In a moment, we'll hear how you choose between these two major products. And also, there's in fact a question from Peter this evening, asking what happens to our investments when the Springboks are winning? Can we make money by buying shares when they win? Obviously looking at the second test rather than the first. We'll have an answer for you, Peter, in just a moment.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the SARA Rail Conference 2025, powering progress, connecting economies.
The Money Show.
Personal Finance with Warren Ingram.
Well, Warren Ingram, of course, is a certified financial planner and co-founder of Galileo Capital. Warren, a question from Peter. What happens to our investments when the Springboks are winning? Can we make money by buying shares when they win? I thought that was an interesting question.
I love the question. I actually had to go and do some research to find out if there is a link between winning teams and winning shares. And unfortunately, the answer to Peter is no. What happens is there is a benefit. So in the stock markets, they always talk about sentiment, the way we feel about things. And on a Monday morning after the Springboks have won, the whole country feels a little bit better. And that is it is an impact. But I think it has a slight economic impact. And if the Springboks keep winning for a period of time, that does lift our mood as a country, and that positive sentiment can have a very small economic impact. But unfortunately, it doesn't drive markets. Stock markets are driven by cold, hard machines and sort of fairly ruthless, hyper-rational people, apparently. That's how they like to tell us they are. And so they don't get emotional about shares when they get into the office on a Monday morning. So unfortunately, no, Peter, that's not a good link at all. And I looked all around the world, whether it's in America or anywhere where the big sports teams win, it just has a slight sentiment bump, but unfortunately not a money maker.
I'm kind of strangely not surprised, I suppose. Okay, so we've been discussing the two big sort of ways to get paid out. One is the sort of guaranteed fixed income for the rest of your life. The other is a variable income. How do you choose between the two? Part of it might well be if you have children you want to leave something for.
Yeah, I think you're touching on, for me, probably maybe the biggest distinguishing point is if you've worked hard your whole life and you want to leave something behind to your kids, a living annuity is a heck of an inheritance to pass along because it saves you so much in tax. We pay away anywhere kind of between 18 to 25% of our capital in taxes when we die, and sometimes double that if there are capital gains and estate duty. So I don't I think I always want people to try and get the most tax efficient options on their investments, and for me it's one that we should think very carefully about. So I think that if you've got kids, this is something to consider very seriously. The other side of this is if you're reaching retirement and you're horribly underfunded. In other words, you have no way of having enough money when you are going to retire. You might want to look at a guaranteed income. And the reason for that is it is likely that they'll pay you a bit more at the start of your retirement than you would draw from your living annuity. I mentioned that you shouldn't start at 17.5%. And in reality, if you retire at age 55, you probably should only draw 2.5% from your living annuity if you retire, and so if 2.5% is not going to pay the bills over a year, then unfortunately you might need to look at a life annuity. So I think your relative level of wealth is important. If you are fairly comfortable and you can afford to live on let's say 2.5 to 5% of the value of your living annuity when you retire, especially at the early part of your retirement, then I think a living annuity might work for you. Also important here is the control over your money, because once you've done a contract with an insurance company and you've you've got a guaranteed pension, that's it. There's nothing more to discuss. That's what you're going to get for the rest of your life. But some people want to know that they've got exposure to overseas markets and they have more allocation, or let's say a greater allocation to cash or a greater allocation to shares. Those kinds of decisions you can make in a living annuity, but you simply can't with a guaranteed or life annuity. And then maybe just, it's quite a tough one, but one to consider is if you're in bad health at retirement and you think you're fairly certain that you're going to die quite some time before the actuaries say you're going to die, then a living annuity might be better because you can draw a higher percentage at the start of your retirement, with a fairly high conviction that you can live well for a short period of time on the income, even if you're not in good health. But if you're on the other side of that equation and you've got longevity in your family and you've done all the right things that your doctors have told you to do about eating well and exercising and all of those things, and you think there's a good chance that you live past age 85 and maybe closer to 95, then consider a life annuity, because then you're going to get one over on the actuaries and make their calculations look bad.
Never want to shy away from getting one over the actuaries. Warren Ingram, thanks very much indeed, the co-founder of Galileo Capital and, of course, our expert on personal finance. It's such an interesting question about how you actually how you actually spend the money, or how you actually receive the money that we've been talking about investments for such a long time. Warren Ingram, thanks very much indeed.
The Money Show with Stephen Grootes is brought to you by ABSA CIB, proud sponsor of the SARA Rail Conference 2025, powering progress, connecting economies.
Well, the Dow Jones finally beginning to shift up. It's now up 0.04%. The Nasdaq is up 0.2%, and the S&P 500 up 0.15%. I suppose it seems shrugging off what the U.S. President Donald Trump says is his decision to fire Lisa Cook, the governor of the U.S. Federal Reserve. I do think that while the story may not be getting the market reaction that you might think it deserves right now, I think it will over time. I wouldn't be surprised if we start to see a real shift in the story at some point. And certainly the dollar is going to start weakening. I think that seems to me to be a very likely outcome of all of this. It is good for our gold shares, of course. The uncertainty is just going to keep pushing gold up. So that is good in some way, shape and form. Plenty to come tomorrow. A couple of results out tomorrow. We'll hear from, I think we're due to hear from the CEO of Curo. They've their update last week was very interesting. We'll talk about the state of private education in South Africa. And don't forget, tomorrow night is Shapeshifter night as well. Good evening. Thanks for being with us. It's 8 o'clock.